Welcome to this week's Gold and Silver Club end of week review. Black Friday special today, so we've got certainly a lot to cover. So first of all, guys, great to see lots of familiar faces again on this week's call, and today we will be reviewing the latest developments in the commodities markets and analysing the week's performance. So if this is your first time on this weekly gold and silver report, today we will cover the end of week summary for gold, silver and commodity currencies. We will look at the top trades of the week, look at live market commentary and technical analysis, particular focus on today being Black Friday in the US. We're going to look at the week ahead, so key events looking forward as well, and cover any questions and answers. Okay, so a few of you say morning, so yeah, morning guys, good to see you all on the call. Right, so today's big headline news really, obviously we had Thanksgiving yesterday in America, and today is Black Friday. So just a little bit of information about Black Friday. It's the day after Thanksgiving, and it's a 3-day Black Friday weekend. So this sees 147 million shoppers hit the stores. So that's almost half of the US population will be out shopping today and over the course of this weekend to pick up bargains for Christmas. So last year's shoppers spent 52.4 billion, 16% more than Black Friday 2010. It's a huge part of the economy out there. This year the Black Friday holiday shopping season is expected to set a new record with estimated 4.1% increase over last year. And the holiday shopping season, it's critical for the US economy because around 20% of retail sales occur between Black Friday and Christmas. So for some retail such as jewelers, it's even higher, nearly 40%, obviously with all the gifts around the Christmas period. So this is important to us for a number of reasons. What we will typically see, the US market, the stock market was closed yesterday, and it's going to reopen today just for a half day, and this will impact the US dollar. And the reason being, if we get this much buying occurring over the course of this weekend, this will be strengthening of the US economy coming into Christmas, and this will cause the US dollar to get an uplift from this as well. Now, you may not see that just yet at the moment, the uplift, but we should see some sort of correlation this afternoon. And the reason for this is that for those companies in America who their sales are predominantly in America, for example AT&T, Landmark, Walmart, these sort of companies, they make up about 99 companies out of the S&P 500. Those companies where their big focus is mainly US sales, so it's not necessarily, they're not dependent on Europe or other areas of the world, it's mainly the US. You will see that those stocks will strengthen alongside the US dollar strengthening, and we know if the US dollar strengthens, that does cause weakness in commodities and other currencies which are playing against the US dollar. So we'll be covering that in a little bit more detail, but this is certainly the Black Friday special today, and we want to talk a little bit further about that and how you can profit really over the course of the next few days. Okay, so Black Friday sales began at midnight, and already, if you look at the headline news, we've got a lot of chaos at the moment in American various shopping centres where people are scrambling to get the best bargains. This is just some snapshots of what it's like on Black Friday. Okay, so we'll just quickly discuss there what it means for USD and gold silver prices, and we'll show you on the charts as well how this could play out over the course of today and into early next week. So first of all, for those of you who are new to the webinar, or first time you've been on the Gold and Silver Club webinars, I'm Phil Carr, professional trader, trainer and speaker, co-founder and director of the Gold and Silver Club. I specialize in teaching people to make money from trading the biggest financial markets in the world, so Forex, gold, silver and oil. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolios. I'm responsible for the research and development of the Gold and Silver Club's trademark strategies that have a proven track record of generating returns for traders, and I'm a regular contributor to a number of financial publications and speak at numerous trading seminars and workshops. Joining me on the call is Nick Kelsey, a professional trader, investment analyst and speaker, also the co-founder of the Gold and Silver Club, and Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, he spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And it's through his first-hand relationships with some of the world's most successful traders he's discovered the formula, mindset and tools to give any individual the definitive edge to make money in any economy. Also regularly writes for a number of global business financial publications and appears frequently on television. In fact, we both did a recent interview for Swiss TV, Dukascopy TV. This is the Gold and Silver Club recent press, so here's us in Global Banking and Finance Review. That was just this month actually, International Life and the South African, just a few publications we've been in, just so you are in safe hands today. And this was just our interview with Swiss TV a couple of weeks back, just about our Gold and Silver predictions for Q4 for up until Christmas. Okay, so we are going to just start off, guys. We're going to start doing some live technical analysis very shortly. So we want to cast our eye onto gold, and let's have a look at what the price is right now. So if everyone wants to just have a look at the gold price at the moment, and let me know what the price is currently, that'd be fantastic. Fantastic, yeah, bang on, guys. So well done, Andrew, John, Taka. Yes, it is $1,733 per ounce at the moment. So that's we're still right at that resistance level. So I will show you. We'll go through that very shortly. In fact, we're just going to cover the top trades of the week, and then we'll go on to some live technical analysis. So the top trades over this week, using one of our strategies, which is price action. So first of all, one of the top trades, this was actually a trade, if you are on last Friday's call, you will see that we were looking at this setup in the morning. So we had gold which had just come down, it was retesting towards the 1700 level, came to a level of support 1707, where it actually previously found support as well. This was around about, it's 11 o'clock actually last week, so it was around about that time, and we were looking for a potential rally back to these Fibonacci levels, 1721 or 1727. Very happy with that trade. So it actually just from Friday's entry point in the morning through to Monday, we had a lovely move on that. We had a 200 pip move just during that duration over from Friday through to Monday, from a 70 point stop loss there. So if you're trading at one lot, from a £700 risk on the trade, $700 risk on the trade, we made 200 pips, so $2,000 profit if you're also trading in lots. So for a 3-to-1 risk to reward ratio, and we've repeated this pattern for most of November now. Every time we've come down to test 1700 on gold, apart from the US, the non-farm payroll earlier in the month. Other than that, we've been supported each time we've come down to test 1700, and we've come back up really to 1727, 1730 thereabouts, and we've kept on finding resistance there. So that was a nice opportunity just to take profit. And also, if by taking profit, that enabled us also to get into additional trades. So coming out at that level, the price has actually retested 1721 several times this week. So this is just smaller trades that we've been able to capitalize on this week. Just with the range-bound nature of gold this week, we haven't really had the usual volatility. It's just been moving sideways between some key Fibonacci levels this week. So when it's come down to test 1721, we've had some nice trade there, just going off 1721, a $3 stop loss, a 30 pip stop loss on that, in order to make in order to make 60 pips on that. So it was a $300 risk in order to make 600 profit for a 2-to-1 risk to reward ratio. Okay, and here we've got silver, and exactly this is for those of you again who were on last Friday's webinar. We were looking at silver in the morning. During the session, silver was actually coming down, retesting a level of support that we've been looking at, or been trading at all week actually. So every time the price had come down to test around that 32.15 sort of level, it's provided a nice opportunity to go in long. It hasn't really been broken. It came down as low as 32, got supported, which is in line with pretty much the whole of November for silver. Every time we've come down to 32, that price has been supported, and through Friday through to Monday was a 92-point rally. Just rallied back to that 33 level, Fibonacci level, which has presented some resistance during most of this week, and we had a nice trade there. So it was a smaller stop required than you did on gold, just a 15 pip stop on that trade, and we had $150 risk on the trade at one lot for 92 pips profit for a $920 profit for a nice risk to reward on that one. It was actually a 6-to-1 risk to reward. So you can see if you only had one trade that you could take between gold and silver, silver offered the far better risk to reward last Friday. So that's just how those trades played out for gold and silver. And we also had a nice short opportunity on USD Canadian dollar. So again, for those of you who are regular on our weekly webinars, you'll know USD Canadian dollar tends to move the opposite direction to gold and silver. So if gold and silver are rallying, you'll see USD Canadian dollar having the inverse reaction, coming down to the short side. So here we had a shorting opportunity at entry at 1.0001, and we exited just for quick 44 points on the trade when we saw that the US dollar had also fallen, gold and silver were rallying, and we just happened to break a Fibonacci level on USD CAD at that point. So it was a quick 44 points. Should say reward 44 points there. So we had a risk of 15 pips to make 44, so a risk of $150 there to make 440. So a nice 3.5 risk to reward on that trade, USD Canadian dollar. And of course we've had yesterday, the markets were closing, not a hugely volatile day yesterday, so those are the trades, really the main trades that we've been able to take from going through from last Friday, since that session, Friday, Monday, Tuesday and Wednesday, which has provided some nice trades on gold, silver and USD Canadian dollar. So it's been another nice week. What we will do now, we'll move across to some live market analysis, and we shall see what's going on with the markets at the moment. Okay, so I'm just going to flip across to my screens. Right, first of all, guys, what I want to draw your attention to is we want to look at the US dollar index. So what we will see today, let me just bring up the US dollar index. Okay, so in the bottom right hand corner you will see the US dollar index, and what we've seen happen over the course of this week really is, as gold and silver have rallied, we actually had silver broke out on Wednesday to the upside, finally broke out of this 33 Fibonacci level, and I'll show you that very shortly, broke out to the upside. But what you can see, this is correlated with the US dollar index actually had a sharp move to the upside last Friday, and then it sold off quite significantly and came down again. And after we had a sort of inverted hammer there, we saw a big move to the downside earlier on in the week. That was on Monday. That was when gold and silver really rallied. So where we had the buying opportunity on last Friday, this is where the US dollar index came up. It tested 81.43. So US dollar index rallied, gold and silver came down, US dollar index came to a level of resistance, and it's actually sold off to the downside after that, and gold and silver subsequently rallied. And where we are at the moment, the US dollar index has actually just broken through it's a 38.2 retracement level. So that's 80.75 on a Fibonacci sort of price action level. We can see the US dollar index has come down this week, and at the moment we're at a bit of a decision point. The US stock market will open this afternoon from 2:30, and will be open just for a half day, and we may see that the buying has already we see that the equities S&P 500 have been pushed up as a result of all the buying. Subsequently, we may therefore see the US dollar get a lift as well, and if we do see that US dollar lift, we will see gold and silver capped for today, and we actually may see further weakness. So for the time being, for this morning, we are seeing a little bit of a rally and a grind higher, but for how long that will be, we're not sure. So First of all, I just want to draw your attention. This is just a very simplified chart for gold. This is just using a very simple line chart because I want to just show you a little bit of seasonality here. So we are following the seasonality pattern very clearly this year. So you can see at the beginning of the year, January and February, where the markets typically, as you get, it's a bullish time that they rallied. We had weakness into the spring. We had consolidation over June, July and August. And then finally in about mid-August, we had a rally to the upside. We had a huge percentage gain in both gold and silver from mid-August through to the end of September. Also were propelled by QE3. October, in typical seasonality fashion, we had a big sell-off on gold and silver. And November, we've actually, you can see here, we've now produced a head and shoulders pattern on gold. So gold's actually, this is the head here, inverted head and shoulders, sorry. So you can see here are the shoulders, here's where the heads come down. And November is typically a bullish month for gold and silver. So we have rallied already back from this 1674 low. We've rallied over 500 points from that level on gold. Now we're very interested. It makes it much clearer on a line chart here. You can very interested to see if we can break through 1740. If we do get the US dollar rally today, this afternoon, we would expect potentially limited upside, that we're just going to hit resistance again at 1730, around about that level where we are now, and we're going to come back down for a potential buying opportunity if we get back to the 1700s or below that, testing 1688 or 1674. It's unlikely we'll get that much of a sell-off, but we may see just a retracement back to 1721 and 1700 if the US dollar just rallies after the Black Friday buying this weekend. May not be priced in today, may be more priced in on Monday, so we may be capped. So you want to be careful going on long right now on gold until we have some confirmation there. So just going back to what we can actually see on our gold chart here, we're going to just see, so here we go, we're actually at a level, again we're coming to this level of resistance. So here we go. So this is where we haven't really gotten above 1738 since the 18th of October. So in order for confirmation, if you didn't have any sort of position on gold at the moment, it's not really the right time to get into that. In our opinion, it's not advice as such. We're just from price action, we are not looking to enter this trade unless we get a break of 1740. That would give us further confirmation that we are potentially going to come back and head up towards 1750 and 1768, but we need to break that first. What you don't want to do is get in around these sort of levels now only for the price to come back down, retest 1721 or retest 1700. So let me just show you that visually. Okay, so at the moment, if we get a break of 1740, what we are anticipating is that if we can break through 1740, if we go up and we can get a break of 1740, we would be looking potentially to see a move back towards at least 1750. Just we'd see a knee-jerk reaction, 1750, and we would, in the longer term, the longer trend, be targeting to get back to this 1768 level if we broke out of 1740. If we have a strong US dollar today, and the US dollar really weighs heavy on gold and silver, we would expect in the first instance a retest of 1727. Then if that broke 1721, be very interested to see if that level would hold, and if that level was to hold, it could present some buying opportunities. But if that carried on going down, we would then be looking to see at 1700 whether this level is going to provide some support. So you may ask, yes, can you sell? So if the US dollar rallies today, can you sell off this resistance level then at 1730? I mean, yes, there is a distinct possibility that you can do that if there's a nice risk to reward on that as well. That will be down to your risk management and your trading strategy there. But those are the three options that we kind of see playing out at the moment for gold. Let's turn our attention to silver. So silver's been interesting. So silver has actually managed to make the breakout when we had the US dollar sell-off earlier on this week. So here we can actually see where silver has finally broken out of this 33 level. It hasn't managed to really cause a big breakout here. We've managed to break out to the upside of about 50 cents up at the moment. So really, there's not really a lot of resistance now on silver until we get back up to let's have a look, until we get back up to around the 35 level. So from where we've broken out at the moment from the 33 level, we may consolidate and move sideways again, but if we can continue, we may come down and retest silver if we get some weakness at 33. So first of all, I would be very interested if we do get a weaker silver price this afternoon or coming into Monday. We'll probably come back, we'll retest this 33 Fibonacci level. Very interested to see if that's supported. If it is, could be a buying opportunity. If we continue to rally past 33, we do expect not to have too much resistance until we get to around 34.75 and up to 35, and that will be back to the previous highs really of September. But we do need some kind of news or something to really push that higher at the moment. There's the markets at the moment, they're just kind of moving sideways, they're consolidating currently. There's not anything really to spark a massive move to the upside, so we've seen just a small breakout at the moment on silver. And we're going to just turn our eye here to have a look at some of the commodity currencies and see the correlation there. Okay, so you can see here just with USD Canadian dollar. USD Canadian dollar has been getting a little bit of a lift this week. It's come down again to this level of support. You can see that highlighted here just at 0.99539. So we came down. So this is actually where we had our sell short earlier on this week, down to here. And at the moment, you can see we haven't really broken past this Fibonacci level, this level of support here. It's been held quite well. So this white level here, this level of 0.99540 is providing support for the time being. It is providing some support. We've seen a little bit of a bounce to the upside. So obviously if the US dollar gains strength today, you would see this come up and potentially retest this 1.000 level on USD Canadian dollar. So that's something that we're going to be looking out for today. And obviously if the US dollar, Canadian dollar does, if US dollar weakens today, we would see potentially a retest again of this support level, and we'd be watching closely to see if we would have a breakdown of that. New Zealand US dollar alongside gold and silver this week has received a little bit of a lift. We had a big sell-off last Friday. We subsequently had quite a nice rally on New Zealand US dollar. So we've had in the region of about 150 point a retracement on New Zealand US dollar there from the lows of last week, and you can see at the moment that New Zealand US dollar is kind of just consolidating at the moment. We've had a little bit of a lift again today, same with gold and silver, but we're capped at the moment until this afternoon, until really America come online, and that's really going to be very important for today, just a few hours this afternoon once the US market opens. And looking at Australian US dollar, so exactly the same situation. You guys who've been on a few of our webinars know that Australian US dollar is correlated strongly to gold, as is New Zealand US dollar. So where we've seen, here is the Friday sell-off essentially. So you can see here where Australian US dollar bottomed out, and we've had some support here. It was a bit of a messy support here. It's just come through. We've had like a dragonfly doji or hammer here. You can see that's very strong buying coming in just as we've come down to retest these levels of support around 1.02825, and subsequently we've had a big rally to the upside, and we've just kind of chopped sideways this week with Australian US dollar. So in terms of price action, there's not really too much going on with Australian US dollar where it is right now. We would be interested to have a look at this if it was to come down and retest levels of support or break out from levels of resistance. That's where we're going to be interested in Australian US dollar at the moment. Okay guys, so that is the main analysis for the commodity currencies, gold and silver. Okay, so the week ahead, key news really to be looking at next week is going to be, we've got quite a number of news announcements actually which are coming out next week. So with regard to the key markets that we are trading, first of all, New Zealand US dollar. So if you want to jot these down, or if you want to get this update as well, you can also get the information from our website as well, Gold and Silver Club, from our newsletter. We'll send out the key events looking forward for next week. But first of all, you want to look Monday. You want to be looking at New Zealand trade balance, and that's a measure of the difference in value between the imported and exported goods and services over the reported period. So a higher than expected reading should be taken as bullish for New Zealand US dollar, while a lower than expected reading should be taken as bearish for New Zealand US dollar. And it's important, obviously, because New Zealand US dollar is correlated to gold price. Then we're going to be looking on Tuesday, 9:30 a.m. UK GDP. That's a measure of the annualized change in the inflation-adjusted value of all goods and services produced by the economy. So it's the broadest measure of economic activity and the primary indicator of the economy's health. So a higher than expected reading should be taken as bullish for the pound, while a lower than expected reading should be taken as bearish for the pound. And that's important because we also trade cable USD GBP. We're also looking at Tuesday, the US core durable goods order, which is going to measure the change in the total value of new orders for long-lasting manufactured goods, excluding transportation items. So a high reading indicates increased manufacturing activity, and a higher than expected reading should be taken as bullish for the US dollar, which would weaken gold and silver, while a lower than expected reading should be taken as bearish for the US dollar, in which case we would see a stronger gold price. And then moving into the latter part of the week, German unemployment change at 9 o'clock on Thursday, and higher than expected readings should be taken as bullish for the euro, and you were seeing a lot of correlation between euro and gold and silver still, while a lower than expected reading should be taken as bearish for the euro. So if the euro sells off, we would expect some weakness in gold and silver. Moving on to next Friday, European employment rate, higher than expected readings should be taken as bullish for the euro, while a lower than expected reading should be taken as bearish for the euro. So again, that's important because of the correlation with gold price. And then next Friday, we've got the CAD GDP. So for those of you who also trade USD Canadian dollar, this measures the annualized change in the inflation adjusted value of goods and services produced by the economy, and it's a primary indicator of the economy's health. So again, a higher than expected reading should be taken as bullish for CAD, while a lower than expected reading should be taken as bearish for CAD. Obviously, you also want to be trading what you see as well with the price action, not just purely on the news, but you also want to make sure your technicals are lining up with the news as well. But those are really the key news announcements to look at next week. And as I say, guys, if you want more information, you can simply subscribe to our newsletter to get the updates as well. And if you're interested to learn in more detail how to trade, you can very simply, via application only, go to our website, www.thegoldensilverclub.com/course form. And I will just show you how you do that here. So it's very simply just going onto our website, thegoldensilverclub.com, learn to trade, and you can fill out the application there to as part of our Gold and Silver Club trading coaching program. The price action strategy we are talking about today, or just an overview, is one of 5 core strategies we trade at the Gold and Silver Club. And lastly, you can, of course, get in contact with us either at office@thegoldensilverclub.com. I know a lot of you, well, quite a number of you are calling in from Asia as well. You can either call us on our Asia office or our UK office. So if you do want to call us at our Asia office, that is 852-8191-0403 for those of you calling in from Asia. And if you want to call into our UK office, it's 0207-193-0403. And finally, if you'd like to sign up to our weekly newsletter, that's very simply, again, at thegoldensilverclub.com, and you'll get gold, silver and commodity currency news on a weekly basis, and invites to webinars just like this. You'll be kept updated with the upcoming webinars.